And there we go. Right. Okay. Welcome. Monday morning. Let's get to it. Let me just move some stuff around. There we go. I think I just clicked something. Hold on a minute. Everyone can see my screen okay, yeah? Just put yes if you can see my screen. Yeah, cool. Okay, fine. Right. We're on it this morning. Sorry, everyone's carrying on joining, so I'll just wait for everybody to get in, and then be good to go. So, right, I'm going to hide the chat for a minute. We'll go through everything. We'll have a look to see, obviously, what has been happening. So, let's obviously go through a little bit of, how uh, markets opened, right? This is obviously what I like to do every Monday morning. As expected, we had this huge gap here. We obviously spoke about yen. This is a massive gap. But obviously, I just want to highlight one of the reasons why I say to, mark up every 500. Where has dollar opened, right? And where has it reacted? Okay. It's bounced off the 97 key level on the US dollar. It reacts really, really well to round numbers. For anyone who doesn't know, that's this here. You can see here, 97, yeah? All right. So that's obviously why I always recommend, marking them up. What we then anticipate, we've identified that the dollar is continuing this way, but what do? We don't just hop on, all right? We actually welcome a bit of a rebound here. All right, because what's that going to do? That's going to get all of our positions to where we, want them, because obviously we want to be selling the dollar from the highest point. All right, so that's obviously how they've opened gold. Massive gap, not huge, but obviously still big. I think I looked this morning; it was about 300 pip gap to the upside. So that's obviously, as expected. I think this is going to just fly. I couldn't go more aggressive on that, but we'll go over that in a minute. Yen, as expected too. There's going to be a lot of hype, which wasn't really spoken about, but will be spoken about a lot this week. So be aware of it. I went over it in the Sunday live. I'm going to do a video for you guys a bit later on. Obviously, had a nice big gap open. There was quite a good opportunity on yen actually. So 100, sorry, 100 and basically about 100 pip gap. The actual trade this morning, very, very early hours, would have been from this position here after this candle come back up to, sell from here. For all you, Sunday night gamblers. I don't recommend trading Sunday evenings. I never will. I've been there. I've tried it. I've lost out too much. And you know what? It's not even if you win or lose, it's the feeling you get if you get it wrong on a Sunday night. You haven't even started your week yet and you've already got it wrong. So, we've always got to think about ourselves psychologically. And yeah, you don't want to start off on a yeah, you don't want to start off behind in the race. And that's why I always think, you know what, let Sunday come, let everyone go crazy, but then we will relax, and then obviously we will let obviously markets do its thing, and then capitalize on Monday morning. So, right, let's just have a little look, Skaven then. All right, Mondays, we obviously had a look at what's happened. We then want to look at what could potentially change potential direction from happening. So, Aussie, all right, we've got an Australian holiday today. That doesn't really mean a lot. It just means liquidity coming from Australia is going to be a bit slower. Um, I think Aussie's gonna just obviously hold where it is. Probably gonna have a bit of a consolidation day. We've got gold is so strong. Australia, one of the biggest miners of gold. So, we all see it's a commodity based currency. So, naturally, if gold is flying, then the price of gold, which is being mined, is going up. So the price of it being, sold is going to be more expensive. And if it's obviously, companies, then they're going to be making more money out of it. And so that is obviously a very, very basic way of explaining why gold pumping will obviously bring the Australian dollar up. However, having a holiday there's going to be low, liquidity today. So I think we should see some sideways movement. We've then got durable goods data. It's supposed to be good for the US dollar. So that's we'll wait and see. It's not normally a massive impactor, but yeah, let's wait and see. Potentially Atlanta GDP. That's might be a little bit more important, but hopefully we'll already be in and clean on a trade. It's not going to change my dollar direction, however this news comes out, because it's not going to be impactful enough to change that. So I think we're going to be selling the dollar all day today. Right, going through from top to bottom. And then obviously I'll have a look at the chat afterwards. So this is obviously how you've got to, structure your the day. All right. We've already identified here. We haven't had to look at any other charts. We've identified we've got to sell. All right. Anything US dollar base, you got to sell the dollar. All right. It's very, very, very obvious. So you should be clicking on any US dollar charts and wondering which way am I going to take it, regardless of it, if it's a double top, head and shoulders, a triple touch, whatever the basic kind of technical entries that you have. Do not take away what this chart is telling us here. All right, this chart is telling us here that gold is in a downtrend. All right, it doesn't even matter if it pumps up today because we're going to allocate for this move here. All right, because we don't want to be selling the dollar from down here. All right. And this is what I mean about wanting markets to come to you. We want to be, selling it when it's around here. So it's popped up a bit and then obviously we can capitalize. So, there shouldn't be any kind of, worries about what is, happening here. All right. So my top pair of the day is obviously gold, or of the morning is obviously gold. Where would I take it from? And obviously, could I have gone any higher? Could I have gone any, lower? I've kind of gone in the, middle here. If we were marking up from obviously when I posted this morning. We'd be marking. I'm going to mark these in a different color as well. We'd be marking a few areas, and I had this question: how do you mark up your, zones? All right, all you got to do, imagine a bunch up of candles is like quicksand. All right. This is what everyone calls, liquidity, so feel free, if you want to just obviously mark up potential areas. All right. And let's just mark these up in, say, for example, green. Yeah. All right. You might want to mark that one up. You might want to mark this bunch up of candles here. You might want to mark up this level of, support here, so, you're just kind of marking up. You would also mark up this area here. All right. Because if we look at the hourly, I posted these about 6 in the morning, or sorry, 7 in the morning. So, you want to be, looking, you might even mark this gap up here as well if you wanted to. All right. Feel free to over, mark them. All right. And then what you can do is you can then, think, right, well, realistically, is price going to come down to here? No, it's not. So I'm going to take that one out. Is price going to come down here? No, I don't think so. All right, is price going to come down here? It could. Oh, sorry, not that bit there. These two could happen. I've marked this here. One, because it's the initial, opening candle. We've obviously had, if you look at this here, we've obviously had on the 1 hour, we've had two rejections here. If you look at this on the 2 hour, we did have a rejection here. So I've marked the bottom of this candle and obviously this candle here. All right, that's where I think zonage is. You could have been a lot more tacking or aggressive if you'd have wanted to, and obviously had your trade here. Yeah, because you can see here potentially you might have looked for something like this, because market has been reacting from this area. However, that to me, it is a little bit aggressive. We could get a move like this before, obviously, we get this pump here. I actually don't think gold's going to pull back very much, you know. So to me, this was a bit too aggressive. All right, so, you know, so I kind of went for that happy medium, you know. But any of this area, you know, it's perfectly okay. All right, but you can understand here if you know the overall direction, then obviously it's very, very easy because you're just marking out where you would particularly want to enter. Now, I think it's value for money for us to enter here. All right, you know, we're not marking up our analysis to get an entry. All right, we're trying to take that bit out of our heads. We're obviously marking up our analysis to, you know, where we want price to come into, where we want it to grab, you know, before it obviously, you know, sends the next wave to the upside or obviously, you know, to the downside. So that is how you've got to be looking at it. Don't place your entries because you want them to trigger. Place them where you want them. If they don't trigger, that is okay. All right. So, you know, across the board, I've been quite aggressive today. Oh, my headphones have packed up. So, you know, across the board, obviously, I've been quite aggressive today. So next one is euro. You know, again here, I can't, you know, because it's an FX pair, we've got to allow for a little bit of, you know, movement here. You know, you can see liquidity. I do want price to come down into this area, trigger, and then, you know, reason being is everyone's going to have their entries here. All right, because everyone's going to be like, right, you know, gaps open. It's got to fill this gap, you know, blah, blah, blah. All right. So what we want to do is, you know, understand how the, you know, overall markets work. They're going to want to drive price into a place. They're going to want to catch people out. So obviously we're going to want to be in that position where the tipping point is, which is going to be in this area here. All right. And I think that's quite aggressive. My less aggressive approach would have been somewhere around here. Oh, hold on, sorry, someone's trying to come in. Would have been here. All right, but obviously we are being a little bit more aggressive. To me, this is too aggressive here. All right, it's way too aggressive. You know, I just, yeah, you know, you will find with FX pairs, they do tend to trend. You know, you can see here you get more of a pullback before it comes up. You know, we're also quite a long way away if you want a really, really beginner way of looking at it. You know, everything normally stays pretty tight to the EMAs. Once it starts to move away, you know, you can see this has moved away quite a lot. It's going to be drawn back into it. A bit like here, it's moved away a lot. It's drawn back into it. You know, moved away a lot, drawn back into it, moved away a lot, drawn back into it. All right. So that's what we want to happen. We want price to come down here. GBP you know, similar. You know, we've obviously got some support here. So obviously that's the bottom of my you know, zone. And then obviously we're looking for, right, if that's the bottom, you know, where's a good entry? I based it on this candle here. You know, if we go down kind of, you know, lower time frames here, and obviously we look, this would have been classed as a heavy level of resistance, yeah. All right, so price has busted straight through that. Where has it retested here? You know, so obviously that is why I've obviously gone for this area here. You know, stops below because yes, you know, if we pass straight through this, it's going to obviously validate the trade. You know, if you want to ultra safe, it's going to have to be here. But realistically, you know, you're not going to do that. And you know, looking at the dollar index, it's not going to pull back that much. We've then got Aussie here. You know, similar. You know, you can see all this price action here. All right. So if price is going to come down, it's going to be drawn into this area, right? And it's also going to struggle to break through. So yeah, and then obviously last but not least, USDJPY. I have gone slightly more aggressive on this. I've gone it on the gap. I don't think it is going to pulled back, much more just because overall it's, so week. We've obviously broken through here. You can see the trap. I'm going to do some YouTubes on this, but obviously what everyone would have is this low, marked up here. And obviously they wouldn't be looking at anything else. Very, very basic way of trading. They would have seen this candle reject and think, you know what, this is going up. It has to. There's one, two, three taps here. You know, it's got to go up. And then obviously what ends up happening, price just ends up taking you out and it'll continue to go down. So don't trade the, stereotypical technical technical analysis way. Look at the overview of what is happening, and obviously understand where markets could end up. So that's about it from obviously what I'm looking at here. Yields starting to pop back down into our range here. Obviously, why do you want to look at the 10-year yields chart? This is this obviously gives you an overview of obviously the investment, the bigger investment appetite into the US dollar. Now, we obviously know, or from rumor, that obviously yen's going to have a bit of an intervention. So expect yields to drop. I actually think it's going to pass straight through this. So obviously, if yields are down overall, it means that it's you can see the percentages here. All right, 4.26, 4.1. That's obviously the return that you would get on a government bond. Obviously, the less that goes, the less appetizing it is for obviously bigger investors to buy US government bonds. Ideally you want this flying, and then obviously there'll be more money being pumped into the country, to the economy, and then it's going to obviously boost it. So this is a really, really good chart to obviously have a look at the overview. And then we've got stocks around break even. I think they're going to stay there. Might trickle up a bit, but at the moment with the risk that's happening, gold is going to be the safest bet. You're not going to go wrong this week buying from any pullback. So yeah, just be aware of that. Right, I'm going to have a look at the chat now. Um, morning, morning, morning. Morning, can't wait for this week. Why is there a gap? Okay, so basically, markets open. Um, Obviously, you can put pending orders if you are, if you're, a particular, size. Hedge funds have a completely different access to the, market, the stock market. Some obviously stocks, you can obviously put pending orders, but obviously they tend to be open at different times for institutions. All right, so there would have been a lot of gold buys on the table. Market opens, and obviously all these gold buys. It's like that. Weighing scales there. There is a massive influx. So obviously that's why you get the gaps in the market open. It is a myth that gaps are supposed to be filled. Trust me, I've tried trading it. It doesn't work. All right. They don't always have to be, filled. You can see here with USDJPY. This doesn't have to be filled. Yes, probably more times, it will, but obviously that's just more coincidence, but you will get caught out more times because what you've also got is wild spreads, especially when there's big gaps in the market too. So yeah, how's the copy doing? We're actually a bit stuck. So we're in AUD CAD. I think we've got one position on this around here, and we've got one, I think, around here. So that's obviously one. So we've got one in profit, one in a little bit of a loss, and then these are our two positions here on NZD had. The actual hedge funds, I cut ours, but obviously the hedge funds are in about five positions here. So this is a very, very rare, move for obviously NZD. It was very, very, strong, last week, mainly because of China, maybe because mainly because the government are being very, very aggressive. So yeah, NZD is unusually flying, and yeah, it is unusually flying. Um, Now gold over 5K and silver breaking 100. Do you ever consider silver trades? And so, one thing that I would say, all right, you've got to find your edge, all right, and if your edge is trading, silver, trade it. I have, found my edge, and it's not one that I'm going to change. I've traded, silver before. It's even more volatile than what gold is. All right, gold is classed as, safe haven. All right, silver more of a. I think at the moment is yes, it's tipped to obviously outperform gold, but obviously, of 2026, but it's not. It's more of a long-term play. All right, so you will see a lot more, you can see the silver here, yes, it's, look at this chart. It's crazy. But obviously, apart from the last kind of probably 3 months. This is the silver chart, and then gold. You can see you haven't had these huge pullbacks here, whereas silver has had these pumps. It's dumped. It's had a pump. It's dumped. It's not as predictable, but obviously all anyone's looking at is probably lowest time frame, 4 hour, thinking yes, it's really easy. All right, but if you zoom out and obviously look at it, gold hasn't had like these moves here where it's done this. All right, you know, uh, gold has been that kind of steady growth. Yeah, exponential. It's crazy. So just be aware of that. It's very, very easy to get caught, and obviously I did get caught on it quite a few times, and then I stopped trading it. Stephen, what are your EMA settings? I get asked this a lot. So 50 is the blue. This is the only bit you can change. The dial here, you just click on this. Mine's thin line 40%. And then this is the 200. All right. And obviously, rule of thumb is to obviously help you guys have direction, and obviously an easy way of identifying it is, you want the 50 to be trading above the 200. So if we were to pick a random pair, like say for example, you're a AUD here, you can then click on it. I would use the 2 hour time frame, and you can then identify because the 50 is trading below the 200. Use this as right. I know it's going to go to the downside. Where am I going to take it? Similar setup before. You can just practice then identifying where, prices, struggle to come into. So to me, you're going to have kind of two scenarios here. You're going to have one here and one here, right? And it depends on how aggressive you are, in regards to where you're going to enter, So just obviously have a, think about it. It's very, very easy. Yeah. Right, let's have a look at this. Kenny had a lucky trade from Friday, held gold buy, brilliant. It's worked out well. Um, Martin, in your VWAP strategy, are there any more commodity pairs other than gold that you'd recommend? I haven't tried it on anything else. I imagine, silver, it's not going to be much, much different. So yeah, um, yeah. There's quite an easy one actually with gold. So if you trade the 15-minute time frame, it's one that I've been looking into. Someone said it to me as a bit of a joke, and I've had it on a bit of a a side um, thing that I'm looking at. But if you wait for the 50 EMA to break, you're obviously going to get caught from time to time. But if you wait for a break, and then obviously wait for some, consolidation, normally that's a good place to enter to buy. You can see here, so price is broken above. We've obviously broken through, so you would have entered around here, bought. You then would have looked here, but you will always get caught. No matter what direction, but it's okay because if you look at it as you're gonna every single time, it doesn't matter with trend, right? If I was to draw it very, very quickly, say for example, you get this, you bought here, brilliant, right? You've bought here, brilliant, right? Price comes down here, you've then bought here, right? And then trend changes, right? This one's going to be a loss, all right? But if you've traded these two properly, these should outperform, two should outperform your one loss by, miles. It's just what ends up happening is, no one can swallow this. So they extend stop loss, stop loss, stop loss, enter, 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 and they blow up these two really, really good trades. So always expect to take, losses. Like I'd said, it's the biggest lesson. It's the biggest lesson. Right, let's just have one more quick look through everything. But I think, although I've gone pretty aggressive, I'm not even sure we're going to get a trigger this morning. I think GBP or Euro is probably going to be our best. I wanted gold just to pull back one more time, but that's not looking likely. But let's wait and see what ends up happening here. And I think USDJPY. Yeah, so it might be a trade that we get into. We might have to be a bit patient. Remember, cool, calm, calculated, and obviously have a good trade this afternoon. But hopefully, we'll obviously have one trade trigger. I'm a bit conscious as well because obviously last week we did have a loss on a Monday. The Monday before that wasn't the best, so I'm being a bit more kind of on it, and obviously that's the beauty of journaling. You've got to really, really, identify patterns in your trading, and lots of times it might be your personality. If you're too keen, too ready to jump in, then you obviously might get caught. But obviously it's up to you to identify what those issues are. A bit like me on Wednesday, I went a bit more aggressive. And obviously it really, really helped us. So yeah, that's obviously one thing just to have a think about. So yeah, right, I'm going to hold it off here. Have a great, great, great Monday. I'm confident we're going to hop on some good trades today and add another green square to our calendar. So have a great day, everyone. And yeah, I will catch up with you later on in the day. So have a good one, guys.